Hello, I'm Bernard, Hickey from interest.co.nz, and welcome to a special housing report brought to you in association with Bank of New Zealand. Today we look at figures from the Real Estate Institute for house sales and prices in March. Now these are important because they're the most widespread and most up-to-date figures on what's happening in the housing market. There are quite a few measures, but this is the one that everyone looks for. The Real Estate Institute says that there were 5,848 property sales in March, and that the median house price or property price was $365,000. That's actually a record high for the median price. And the volumes of 5,848 was pretty strong, even though when you compare it with March a year ago, it was actually down 5%. Part of the reason for that, of course, is a real slump in sales in Canterbury and Christchurch in March, obviously after the February the 22nd earthquake. Once you exclude Canterbury, sales were actually up 1.5% in March from a year ago. And once you adjust for the seasonality, obviously March is a pretty good month, actual volumes are up 5.4%. And when you compare March with February, volumes are up nearly 30%. So it was a strong month. Now the main reason for this was a very strong month for Auckland. We've had a sneak preview of that with figures from Barfoot and Thompson last week. There were 2,437 properties sold in Auckland, or the region of Auckland, in March. So we're talking almost half of the volume of sales in New Zealand was in Auckland. And in March, sales in raw form were up 53.2% from February, and actually up 11.4% from a year ago. So it's not just a March thing. There was actually an improvement in volumes across all of the agencies in Auckland in March. In fact, it was the highest March sales in Auckland since March 2007. That was at the peak of the boom. And it was the highest month since July 2007. The real estate market in Auckland is certainly back on form. Now, the Real Estate Institute of New Zealand says that the surge in Auckland seems to be related to a shortage of stock. There hasn't been a lot of new houses built in Auckland lately, and a big chunk of the stock has been taken out because of the leaky building issue. Also, I think there's been quite a bit of the money that's come to the wealthier Aucklanders from the tax cuts in October that's been used to build up, to go up a notch to a richer house, perhaps with some extra debt built in. Now, looking at these Real Estate Institute of New Zealand figures, they seem to conflict with the figures we saw yesterday from Quotable Value. And you may ask, why is that? Well, they're a slightly different set of figures. Quotable Value uses figures from local councils on settled deals. Now, they often take quite a while to go through. Also, the QV figures look at like-for-like properties, what's happened to their values, and they look at a 3-month period. So it means that the figures that happened in March, the actual sales in March, may not be reflected yet in the QV figures. Most people look at the Real Estate Institute figures for the most up-to-date measure. It may not be the most consistent measure over time, but for what's the freshest and the hottest, the real estate figures are the best ones because they use the most recent unconditional sales figures in the month of March. Now, looking at other reasons why there seems to have been a jump up in Auckland in particular, because it's not widespread, prices and volumes in the rest of the country are pretty subdued. There was the rate cut from the Reserve Bank on March the 10th, and home loan affordability, particularly for those people with 2 incomes and outside of Auckland, is at its best levels in 7 years. Now, this is all because of low interest rates. That's the real factor here. People are asking now, what happens now? Are we going to continue to have this separation between Auckland and the rest of the country? And what will happen with interest rates? Because that will decide whether we see a continued improvement in the property market. And most economists are saying that interest rates are likely to rise towards the end of this year and into early next year as the Reserve Bank removes the stimulus it put in place immediately after the earthquake. What will happen then? Will affordability improve? Well, obviously it won't. And the other issue to watch is how much new supply comes onto the market in terms of building consents. Certainly there's not much indication of that at this stage. Now, just a final look at this chart. This is the Real Estate Institute's Housing Price Index, which is a stratified measure, which actually shows prices only up 0.5% in March. And they remain down about 5% from the peak at 2007. I'm Bernard Hickey. That was a special housing report brought to you in association with Bank of New Zealand.